thing that hit the news today is the IRS just announced increases to the amount that you can contribute to a health savings account. And for 2024, it's the biggest increase we've ever seen. So I wanted to take a moment to talk about these health savings accounts and what the contribution limits look like for folks right now.
Mm.
They are probably the most misunderstood and underused tool that we have for planning for the future. So
Yep.
I'll read out some numbers here. In 2024, you will be able to contribute 8,300 for a family and 4,150 for an individual. This
Wow.
year, 2023, yeah, that's a huge jump.
Yeah, it's
This
big.
year it's 7750 for a family and 3850 for an individual. If you're over 55, you get an extra $1,000 and that amount does not change. And now,
Yeah.
why would you want to do this? Well, health savings accounts, you put money in today and you get this trifecta of tax benefits. It's like this is from a tax standpoint, is the best tool available to us in the world.
Definitely.
So, all contributions made to the HSA are pre tax or tax deductible, depending on how you do them. All of the money that you pull out to pay for medical expenses comes out tax free, kind of like a Roth IRA. And then all of the earnings that you get on your HSA, interest, dividends, capital gains over time are not taxed ever. And you can actually invest in HSA. So you could be growing this money at a pretty good clip and never pay taxes. Plus, you got a deduction on the way in. It's amazing.
Yeah.
Um, think about it this way. It's really helpful as a retirement planning tool because you can use this to pay your medical expenses post-retirement, including your Part B Medicare premiums. So let's say in like the last 10 years leading up to retirement, if a married couple max this out, they can have $100,000 sitting in a health savings account that they can access tax-free to pay medical expenses, including, like long-term care premiums.
Yep.
Um, now, who can contribute to this? You have to have a high deductible health plan. Um, According to the IRS, that is a deductible of at least $1,500 for an individual and $3,000 for a family. If you have a plan like that and your employer doesn't offer a health savings account that you can do through payroll withdrawals, you can go ahead and just set one up yourself and start contributing to it. And of course, you can invest it. So this was great news coming from the IRS this morning, and we're really excited to hear it. We hope more people take advantage of these accounts.
Yep. And there's one other thing I would add is that you could save up your medical expenses and use and access the HSA in the future and for expenses you had in prior years. So you can save them up, and if say you want to use the money to go on vacation or something, as long as you've saved up your expenses in prior years, you can use them to pay those back, ostensibly, but you're actually using it to go on vacation. So it's pretty cool.
Yeah.
It's a really good
Yeah.
tool.